Q4 with notable positivity, propelled by notable surge in investors' confidence directed towards listed corporations as index closed 101,154.46 points. Reports which shows that the all-share index, which is the broad index that measures the performance of the Nigerian stocks, opened the trading month at 74,773.77 index points at the beginning of trading in, and closed at 101,154.46 points at the end of January 31st, gaining 26,380.68 basis points. This figure represents a substantial 35.3% as a year-to-date return of the NGX all-share index, underscored exceptional performance defying prevailing economic challenges such as elevated inflation, a depreciating exchange rate, and persistent security concerns. Analysts say the earnings season and investors' optimism were key factors that drove the demand for shares in the market during the period. Joining me by phone is the Vice Chairman, High Cap Securities, Mr. David Adonri, to talk more about the performance of the market. Good afternoon, Mr. Adonri. It's good to have you on the program. Let's go talk to my colleague who's also standing by at the exchange, Effiong Ekop, to take it away from Mr. Adonri. I will try to get back to Mr. Adonri to continue this conversation. Effiong, if you can hear me, the market has played so well in the start of the year with the figures we are seeing at the end of January. Take us through what you think is responsible for this performance of the Nigerian market. All right, there we are still trying to connect even with Effiong Ekop. But Mr. David Adonri, good afternoon. Can you hear me now?
Yeah, I can hear you, Tolu. Good afternoon, and compliments of the season to you all.
I wish you the same. Now, we see that the market is doing positively considering what has happened for the first work month of the new year. What do you make of this?
It's a wonderful month wherein investors harvested extraordinary income from equities in the Nigerian capital market. It's a performance that words cannot describe, completely unimaginable. And is can you hear me?
Yes, please go ahead. I can hear you loud and clear.
Yeah. So it's a kind of performance that is unprecedented, like we have never seen before in the equities market. And the performance is riding on the back of the wonderful performance in 2023, wherein the all-share index of the exchange performed best in the whole world. I don't know how we are going to describe this of January now. It's beyond global performance. It's like a space performance. It's completely wonderful and unprecedented. But on the other hand, it has put a lot of stakeholders in the equities market on edge, because essentially the market has been driven more by sentiment rather than concrete strength of the fundamentals of the economy or of the listed companies themselves. So we are hoping that now that we're very close to the earnings season, in fact, a number of companies have started releasing their results. So justification of the rally in the prices that have hit the rooftop will be what we'll be looking at from this point on to see if their earnings yield or dividend yield or dividend payout will justify the high prices of those securities. But however, the market has been very resilient, Tolu. And the major reason is because we don't have a lot of hot money in the equities market. What we have is patient capital. We have domestic investors now taking over the reins of affairs of the equities market. And so they do not really panic like the foreign investors who, when they hit their objectives in the market, they quickly exit to take profit. But we have a lot of patient capital now in the market. But however, if the appreciation, the meteoric rise and the high level of appreciation we have in the market translates into activating the primary market, in which case it would have been a wonderful development for the Nigerian economy. Because if this rally in the secondary market can reactivate the primary market and the primary market becomes very active and it starts forming capital that will enable the economy to generate productive employment and create wealth, then it would have been a big win for both the market and the economy. But a rally would obviously come to a point where it will start losing steam. And I think for the last 2 days of the month, we witnessed that. The market has started losing steam, losing ground on the 30th, and then also losing further on the 31st. We still hope to see what the market has done today, Tolu. Thank you so much.
Okay, now let me also ask Ekop this question. Ekop, if you can hear me, what is happening with trading? These positive figures we are seeing seems to be very interesting. And also, we see that Mr. Tedola is now the chairman of FBN Holdings. I think he holds a high number of shares in that organization at the moment.
Tolu, we've seen the volume traded, picking up, and general indices also showing up after the 2 days downward transactions. As at this time, even though the market has not closed, we have traded over 700 million units of shares valued above 11 billion naira. But the issue, that is disturbing some sensitive investors concerns the value of our naira, because as it is now, it will mean that if this inflation level continues the way it is, it will eat into the value of dividends that investors and fund managers are getting, out of the exchange. And so many people are worried that something needs to be done so that we should have a stable value of the naira, indeed an improved value of the naira, not the one that is shrinking every day, every minute. And so the trading pattern is looking upward. And there are still indications that many people look up to the exchange to be able to provide a credible way for them to make a good living standard, because doing businesses outside of this exchange like that, the larger economy, seems to be more difficult than anybody can predict. And so a situation like this, we do not want to see the entire economy being thrown into turmoil. And so those who are controlling financial sectors and agencies, we expect that they get their acts together. Let's see how the economy will be tightened up and then things open up. For the trading at the market, interest is still there. The market is looking forward. The market is looking upward.
That's a good one. And like I always ask you, sustaining this, how well do you see the market staying with this positive trend?
Tolu, it is difficult now to talk about sustainability, because we've seen 2 consecutive days this week where the markets dipped very well, and it went beyond a whole percentage point. If there is fear among investors that the sliding situation would continue, the likelihood of them pulling off their investment from the exchange is there. That means they can take funds off the market and look to the area that they think they will get immediate benefit. And that may not be good enough, because it could only be, buying the dollars and maybe reselling to some other people operating in a different windows. If this continues, it is not good for the entire economy. Some people may make quick profits, some institutions may benefit from it, but we know that ultimately the larger economy would be the loser. And so something needs to be done to fix the nation's economy on a credible level, let the instruments of money as an exchange of value and store of value, let it be credible. That's the reasonable thing to do. If investors move their investments out of the market because of fear, the alternative things will just be short-term thing, and the market needs to be, brought in a way that people will sustain interest on a longer term. That is where companies are able to pick money and do long-term investment. If this situation, if this confidence is eroded, then we are not doing very well.
I must thank you so much, Effiong, and thank you so much, Mr. David Adonri, there for joining us on the program. We appreciate your time.
Hello.
Now, the exchange rates of the Naira and the